Good morning everybody, John Phillips here, another podcast we're doing today, and I've got Aidan Walker from me from the Skipton Building Society. Thanks for coming this morning, Aidan, really appreciate that. And for those people that are watching, we're going to cover a few things today. First of all, Aidan, I'd like to speak to you about your new 100% product for first time buyers. If you cover that please, I'll be very grateful. And what it kind of produces for them please.
Okay. So we launched the product back in May this year.
Right.
We feel that there is some real challenge out there for people that are renting, and it's really difficult to save for a deposit for a house when you're paying rent and associated bills at the same time.
Absolutely.
So the aim of this product is for people that can demonstrate that they've been paying a level of rent and bills for a period of time, so that is for at least 12 months, then that level of rent will dictate how much mortgage we will potentially lend to them.
Oh, okay.
Okay.
And I take it they have to have a good credit history?
Yeah, we'd be looking for them to have at least a good credit history on your main credit providers. So we're not, people unfortunately, if they've got any adverse, they wouldn't be eligible for it initially. And it's for people who've not owned a home at least within the last 3 years. So we class them as a first time buyer, providing they've owned no house in the last 3 year period.
That's good. And it's all done on a credit scoring basis?
It is.
Yeah, that's great. And also, can you also talk about, please, this is a big thing people ask me about today, family gift deposits. How does that fit the Skipton Building Society?
Yeah, so we will accept a family gifted deposit on our mortgages. We define family as in the definition which is on the family law website, so that can be cousins, uncles, aunties, as far out as that. So if
but not stepfathers or...
But yeah, it can be. Okay. Yeah, so again, reflecting modern families. So it is literally, we'd recommend anybody who's unsure, there's a definition on the family law website and they can check what is defined as a family member under that, and we align ourselves with that in terms of who will accept a gifted deposit from.
Oh great, thanks for that. I'd also like to touch on, if we can, tenant consumer purchase.
Yeah, so tenant concessionary purchase.
Sorry, concessionary.
Yeah,
yes.
Concessionary purchase. So that is where you've got tenant been living in property for a number of years. They've got a good relationship with their landlord, and their landlord might be in a circumstance where they're looking to sell the property. If the landlord is willing to sell the property potentially at a discount, and they might be willing to gift that equity to the tenant, then we would be happy to use that gifted equity as effectively the deposit, so the tenant wouldn't have to put any money in to buy the property.
That's great news, and it's got to be a genuine gift, genuine valuation.
Absolutely.
Thank you. Can we also talk about joint borrower sole proprietor for those watching?
Yes, so this is a market that we Skipton have been in for a while. Again, similar to our 100% track record product, it's geared towards trying to help first time buyers on the market who potentially don't have affordability in their own right. We've recently rebranded it to call it Income Boost. A lot of people don't understand what joint borrower sole proprietor is, it's quite technical. Yep. So we thought by renaming it Income Boost, it would describe what the purpose of it is. So joint borrower sole proprietor, it can be family members or a friend. So we will allow anybody to come onto the mortgage with somebody and help them with affordability to get onto the housing ladder.
That's great, thanks for that. Okay, right, so how do you see 2024?
2024, we can see it being potentially another interesting year for the market.
Yep.
Interest rates, we remain to be seen where they're going to head. At the moment, obviously the Bank of England have left it with the base rate where it is for the last couple of times. We don't particularly see a massive reduction happening next year. We see base rate generally remaining quite stable for the majority of next year, but hopefully if we see some stability, we will start to see more people coming back to the housing market and hopefully a more buoyant purchase market next year. We also see a lot of remortgage activity because there are a lot of maturities with people coming to the end of existing 2 year, 3 year and 5 year products.
Right, just coming on to that next bit, can we also talk about these people that want to product switch? They're just coming off the 5 year fixed rate, they've had it fixed at 2.5, as you know, 3%. What kind of deals are available for them?
Yeah. So speaking for Skipton, we'll allow yourself as the customer's introducer to access our product range 6 months in front of their product coming to an end.
That's good.
And you can see what rates are available at that point. Obviously you're giving advice to your customer. If it's the right advice for them, we also allow you to potentially increase the term of the mortgage which might potentially help with affordability from that perspective. So there are some options available. We're also signed up to the mortgage charter, so if customers are requiring any further assistance, they can potentially look at options via the mortgage charter as well.
That's great, thanks for that. I know you're not an adverse lender, you're a high street lender with squeaky clean. Can you tell me what kind of adverse credit, if any, you'd accept? If someone's got a couple of blips, please.
Yeah, like you said, JP, yeah, we're very much a high street lender, so it's only small amounts of adverse. So we're really saying if somebody's got a default, providing it's more than £200 in value, we can look at that, but anything more than that wouldn't be for us. CCJs, we can look up to a maximum of £500 in value in reality, and again, that must have been satisfied.
Okay, thank you. Let's just touch on buy-to-lets. How's your buy-to-lets looking?
Yeah, buy-to-let, so we do lend a decent proportion of in the buy-to-let market. One of our main USPs is that the customer doesn't have to be an owner-occupier, providing they've got mortgage experience. They could be currently living with a partner, with family. If they previously had a mortgage and you can demonstrate that experience, then we will lend on a buy-to-let basis.
Oh, that's good, really good. And can we also talk about home improvement loans? Do you get involved with them? A lot of people are building on now.
They are, yeah. We've seen that a lot since the
pandemic. What's the criteria for people watching?
Okay, so in terms of home improvements, we will lend on a remortgage basis up to 90% loan to value, where the purpose of extra money is for home improvements. If the loan to value is above 75%, then we will be asking for evidence of the proposed works up front, so estimates from a builder or another company to show us what the work is and how much is being raised for that purpose.
Great stuff. I have a lot of people come to me that want to move from, let's say, Santander or Halifax, and they've got credit cards and they're not happy about consolidating. So on your remortgage, consolidated, if you've got someone with loads of debts, credit cards, but they've got good credit, what is it that you don't like? What won't you do?
So we won't lend for debt consolidation. So if somebody's wanting to raise money to pay off existing unsecured credit cards or loans, that is not something we'd be able to help with, unfortunately.
Okay.
If somebody's coming to us and they're looking to do a remortgage for home improvements, for example, like you mentioned, if they've got a lot of credit in the background, that could potentially impact them when we're running a decision in principle, and it could impact on their credit score if they've got a lot of debt in the background.
Right, and your rents today, I know they're coming down tomorrow.
Yeah.
Next week, what will your kind of best fixed rate be on the market for 2 or 5 years?
At the moment, it's sort of, we're looking to reduce, and like I said, the market's very competitive at the moment. Our lowest rates tomorrow will be coming below 5%. But again, it's always subject to change in the market, so whether they'll remain there or go lower or higher, it's difficult to say.
Great. Aidan, thanks for coming in today. You heard it from Aidan Walkers, my business development manager from the Skipton Building Society. Thanks for listening. Anything you want to know, give me a call, John Phillips, 077 900 27038, and thanks for watching in. Thank you. Thanks, Aidan.
Thank you.